So prices have gone astronomical across the country over the last 2 years, and here in Utah, it's no different. We've seen up to 50% increases over just the past 2 years. The next thing that is going to follow, and we've already started seeing this a little bit, is going to be rent prices. We're going to be jumping into my computer here, doing an article review on why rent prices are going up and how this is going to affect you if you're a buyer in the market, if you're a renter in the market, or even if you're an investor, what you need to know about this. So we're going to cover some really important information here. I'm going to give my commentary along the way. Now, before we do that, if this is your first time to the channel, make sure to subscribe to the channel so that you don't miss a thing when it comes to these video updates that we do here on the Utah housing real estate market. We talk about everything you need to know about what it's like to work here, eat here, sleep here, live here, and especially anything real estate related. We're going to discuss it here on the channel. So make sure to subscribe. And also, if you're thinking about making a move here, reach out to me. I have people from all across the world reach out saying, hey, I'm moving to Utah. I've seen your videos. I love them. You'd help me with that move, right? And I love when people reach out. So my information's here on the screen. Call, text, or email anytime, and let's have a chat about the type of home and lifestyle that you're looking to have when you make that move here to Utah. All right, now let's jump into the article here. Let me go ahead and make my head a little bit smaller. And this is going to be another article here from one of our favorite news sites here, KSL.com, right? So this title says Housing Market, Why Rents Are High in Utah and the West. While housing prices in Utah and across the West continue to climb at staggering rates and price more and more would-be home buyers out of the market, rents are far from stagnant. Rent prices aren't escalating at the same rate as home prices, but they have been on a steep upward trajectory, especially in high-growth states in the West. Compared to other major metropolitan areas across the country, Western states stand out for the biggest rent price jumps over the past 2 years after the COVID-19 pandemic sent the U.S. housing market into upheaval. This is led only by metros in Nevada and Idaho. Salt Lake City ranks as number 3 in the nation among large metros that saw the biggest price increases from 2019 to 2022, according to a new report. The top 10 large metro areas broke out, according to this analysis, which the U.S. Department of Housing and Urban Development and Census Bureau data to determine which areas have seen the sharpest rent price jumps. So we've got a couple different cities here on this list. We've got Sacramento, Las Vegas. Here in number 3, we've got Salt Lake City, Utah. Rents jumped 24.6%, up $291 from a median rent price of $1,184 in 2019 to $1,475 in 2022. So rents have already gone up pretty substantially, 24% over the last 3 years. But I'm actually expecting that it's going to continue. I wouldn't be surprised to see another 20 to 30% on top of that over the next 12 to 18 months. I think we're going to see really massive price increases with interest rates going up. There's going to be more people looking to rent in the market because they're now priced out of the home, and so they're going to be willing to pay a higher amount for rent. And then you've also got investors at the same time who are buying properties right now and saying, hey, you know, rents need to be here, or rents should be here in order for this property to make sense financially, right? Landlords, believe it or not, actually don't have a ton of margin in most cases on these properties. They're not earning like this insane return, which we'll actually talk about here in just a minute. And so, you know, oftentimes those rents do need to go up, and it has to be within reason, right? Or else you're going to be known as the slumlord. But it's just the reality of the market. That's where you are going to be if you're looking at investing in the market. You're going to see those rent prices increase, and they almost have to increase to be able to provide a return to the investor. So, number 4 on our list, Phoenix, Mesa, Jacksonville, Riverside. All the rest of the cities and areas on here are not in Utah, so we're just going to skip all that and come down here. So, should you rent instead of buy in Utah? While rents are going up, are indeed going up in the Beehive State, they haven't gone up as fast as home prices over the past 2 years. Home prices have gone up as high as 50% in 2 years, like we talked about. Smith said, while rental rates have only increased half that, about 12 to 15% a year. Yeah, rents have gone up, but it's only natural since home prices have gone up twice as fast. Therefore, he argues it is more affordable these days to rent than it is to buy. I would have to agree. If you're looking to buy a house in this market, it needs to be because you want the pride of ownership. It's because you're going to stay there for a long time. It's because you want to lock in your payment and say, you know, I'm going to pay $2,000 a month or $3,000 a month and call it that and not have that change, right? Whereas if you're renting, that could change, right? Rents will go up in most cases. They rarely go down, but rents could go up once you're in that place. So if you want a steady payment, that's another reason to buy. Or even if you're just looking to take advantage of like tax benefits or place some cash or something like that, then it might still make sense to buy. But but purely from like a monthly payment financial statement perspective, it really makes more sense to rent in these cases. So there's pros and cons to both, of course. That's what we've talked about here in this channel. It's no different here, but it is actually just based on that payment a little bit cheaper to rent than it is to buy in this market. Typically, buying a home is a better long-term investment. Of course it is. Nowadays, as prices continue to climb, know that depending on your area, you'll likely need to stay in your home longer, perhaps 5 years rather than the 3 years compared to pre-pandemic times, in order to get a return on your investment. In today's market, however, buyers are wondering if they should wait for a potential price drop-off. Keep in mind, local housing experts do not predict a bubble popping or price drops, noting Utah's housing supply was already behind the state's rapid population growth even before the pandemic spurred many Americans to reevaluate their lives and look to the West for larger homes and smaller price points. So like we've talked about here on the channel before, I don't expect there to be a big bubble that pops here in Utah. I don't think that prices are just going to, drastically crash 20, 30, 40%. I think there's a slight chance that it could come down 5, maybe 10% over the next 6 to 12 months. But I think after that, they're going to remain pretty stagnant and stable, and then they will continue to climb going into the future. I don't think it's going to be drastic. I think they'll be pretty steady for at least, for between 12 and 24 months. And then I think the growth will continue to start increasing after that point. That's my own personal opinion. We'll see if I'm right. I don't have a crystal ball, of course, but it'll be interesting to see what that looks like. So if you're sitting on the sidelines, you might pick up an extra 5%, 10%, but don't expect to be picking up properties for 20% or more below where they're at right now. So that's just my opinion. As mortgage rates continue to rise, Utah's severe housing shortage persists. Local experts have warned rates may help cool demand, but in fast-growing areas like Utah, they may only slow price increases, not stop them, while pricing out even more would-be home buyers. This is the interesting part of this article where it talks about, hey, is greed the reason why prices are going up? So we're going to talk about that here and read through this, and I'll add my thoughts as well. I'm an investor myself. I have investment property, so I feel like I've got a pretty good handle on where the investment or the rental market is, what's happening in the rental market, and I see things from a landlord perspective. I see it from a real estate agent perspective if you're buying or selling investment properties. As renters become increasingly frustrated with home and rental prices, landlords hear and often bear the brunt of those frustrations. But he said it's not greed that's pushing prices high. We're barely passing on our expenses. We're not making a whole lot of money, Smith said of renters. With inflation and labor shortages, Smith said landlords are having a hard time keeping up with expenses. That's a really good point, right? I just had to buy a sheet of plywood for a project I'm working on one of my properties. The plywood was $65 for one sheet. One sheet of wood, $65. And then I've got to cut that up, and we're building a door with it actually. And this is going to cost me, a couple $100s just to build this door. Whereas a couple years ago, it would have been pretty easy to do that for, $150. Now it's just gotten so expensive, with inflation, prices are up, and labor shortages. The contractors who are out there are charging significantly more than they were just a couple years ago. Rents, he said, are rising just slightly more than 11.2% producer price index increase, while only 9% of rents are returned to owners or investors. The rest, 91% on average, goes to expenses. It's not really a high profit business, so when our expenses are going up as dramatically as they have been, we're either making less money or we need to figure out a way to pass those expenses on. So it's kind of this give and take, right? Of course, when you buy rental real estate, the whole goal of that rental real estate is to make money, right? That's the reason why you're buying it. It's a very, real estate is the largest asset class in America. It's why it's good for homeowners and for those people who go out there and say, hey, I'm going to buy 2, 3, 4, 5 houses, maybe 10 or 15 houses. The whole goal of that is to make money, right? Whether you like it or not, we have to have money in life, and that's something that we have to continue to bring in to provide for our family, right? So that's what you're expecting. So you do have to raise rents so you can still make some money, but unfortunately that does mean you have to pass some of those expenses on to the tenants. Meanwhile, supply continues to fall desperately behind demand, and landlords are being inundated with prospective renters. That's true. I do get a lot of prospective renters whenever I list a property. I do get a lot of applications. It depends on the property. Some of the time I get a really good applicant right off the bat. Other times it might take 2-3 weeks to get an applicant that's actually pretty decent. So there is a little bit of variation there. The cities are still not approving enough housing. We're just not building enough housing of all sorts. There's just generating more demand than we have supply. And the consequence of that is is increases in those housing prices. While renters are frustrated, Smith said landlords are having a hard time too, while being understaffed and overworked. When people are frustrated about their rents rising, who do they take it out on? The landlords. So landlords are, getting frustrated customers, and they get a lot of crap, and they're just trying to do their job to provide housing for people. Despite the perception that it's a great time to be a landlord, Smith said it is really rather a difficult time. Labor shortages are making it increasingly difficult to hire employees, especially in maintenance and construction, and so property managers are working more hours than ever. Meanwhile, prices for paint, appliances, and building materials continue to go up, so it's a very difficult time for providers too. From angry customers yelling at us, labor shortages, to big increases in costs, the rental market is hard on operators too. So unfortunately, whether you like it or not, it's almost as if like everybody is suffering at the hands of what's going on, right? We've got inflation that is unable to get under control, and the renters are suffering because of that. The landlords are suffering because of that. The contractors are, the property managers, everybody is kind of suffering a little bit because of this insane inflation that we're seeing in today's market. So I just want to run through really quick how this affects you if you're either a renter, a buyer, or an investor, and what that looks like for you. So if you're a renter, you are going to be looking at increased rents, right? Although renting is typically cheaper, or at least right now is cheaper than buying, that might not be the case in the future, right? Give it another 12 to 18 months, and I think renting will be, right up there again on par with the benefits of buying a home, and seeing that return in about 3 to 4 years, which is kind of the historic average there. So if you're a renter, do expect those rents to continue to increase. If you're looking at paying $1,700 right now, expect $1,800 or $1,900 in the next couple of years. If you're paying $2,500, that could easily be $2,800 in just 12 to 18 months. Now, second, let's say that you're a buyer in this market. Buying is going to be a little bit more expensive, like we just talked about, but it still might be the right decision for you. If you're looking at renting instead, you might be looking at rents that seem high from where they were a couple years ago, but I do expect them to go even higher than where they're at right now. So that's something you have to keep in mind. It might make more sense to actually purchase, even if you're looking at the market thinking, oh man, prices are elevated, interest rates are elevated, which by the way, I think interest rates will come back down in the next 2 to 3 years. Probably not as low as they were, but definitely I think they'll come down to about the 4% range. So that could be a good time to where, even though you're buying a property now with a high interest rate, you could refinance it in a couple of years, hopefully, assuming the interest rates go down, and be able to, pencil out to be an even better investment. So that could be something where it makes more sense for you if you're a buyer of real estate. If you're going to be in the market, you could be able to get a lower payment. So it still might make sense for you. If you have questions about that, reach out to me. I'm an honest person. I hope you find that, from watching my videos. I'll tell you, hey, renting might be the better option, or buying might be the better option. Everybody's in a different scenario. So reach out to me. I'd love to chat with you about your own scenario, and I'll just give you my honest opinion. Now, lastly, let's talk a little bit about how this affects investors. So if you're an investor in this market, let's say you already own some properties. Well, if you locked in your interest rate and you locked in your loan, let's say 5 years ago, well, then you're gonna be sitting pretty good, because you were expecting when you bought that property, rents might have been, let's say $1,500 on that particular property, but now those rents might be $1,800. So although a lot of that rental increase is going towards increased costs for taxes and insurance and building materials and repairs, you are going to capture hopefully a large portion of that for yourself. So if you're already an investor, you're going to be pretty happy about this. Rising rents means that you make a little bit more money. However, if you're looking at buying investment real estate right now, it can be pretty tough. I've talked about this before on the channel. Right now, with prices where they're at and interest rates having gone so high, you're looking at almost 6% on interest rates right now for investment properties. And that's significantly higher. I mean, I refinanced a couple properties last year, and I locked those in at interest rates are about 3% to 3.5 for investment properties. So it was significantly lower. So right now the numbers are a little bit tough to make work. So I do expect that we'll see prices actually come down a little bit more substantially in the investment world. I do think that for duplexes, triplexes, fourplexes, we're gonna have to see those numbers come down, because right now the numbers just do not make sense if you're getting financing. The cap rates are not going to be affected quite as much, but if you're getting debt on that property, it's gonna be so expensive that it's just hard to make it cash flow. And so therefore I think there's gonna be more properties coming to market, and I think they're gonna have to come down in price. We'll see how that turns out. That's just kind of my prediction, but it'll be interesting to see how it plays out over the next 12 to 18 months. With all that said, guys, thank you so much for watching. I hope you enjoyed this video. If you did, give me a thumbs up on the video, and consider sharing it with a friend or a family member who's also interested in Utah real estate. It would mean a lot to me, and hopefully it'd provide some value to them. And last but not least, reach out to me if you're thinking about making a move here, or even if you already live here, you're looking at buying, you're looking at selling, you're looking at buying investment property. I do love all of that. I love when you guys reach out to me. So my information's here on the screen again. Call, text, or email anytime. I'd love to hear from you. And with all that said, guys, we'll catch you in the next one.